It's Monday, 9th of February, 2026. Welcome back to your news update on Blip Brief, crisp, but almost everything updated every weekday.
And honestly, if you were planning to ease into the week with a quiet coffee, the markets have other plans. We are seeing some absolute fireworks on the screens this morning.
Fireworks might be putting it mildly. I'm looking at the data, and it feels like a tale of two very distinct realities.
It really does.
On one side, you've got Indian equities throwing a party, and on the other, commodities are just, well, melting down. It's a classic high-octane risk-on Monday, isn't it?
It is the textbook definition of risk on. The safety nets are being cut, and capital is just rushing into growth.
Let's start with the green arrows then, because everyone loves a rally. The Indian indices, Nifty, Sensex, they aren't just edging higher. They are showing a serious trade thaw.
Right. And if you scan the top 10 firms by market cap, 8 of them have surged.
So it's a broad-based lift, not just one lucky sector.
Exactly. And the engine behind this move is significant. It's not just your domestic retail investors feeling optimistic. The foreign institutional investors, the FIIs, have officially turned net buyers.
Which is a massive signal. I mean, we've spent months watching FIIs sit on the fence or, pull money out.
They've been very cautious.
For them to turn the tap back on, something fundamental must have changed.
Well, money hates uncertainty, and it loves policy frameworks. They are reacting directly to the ink drying on the India-U.S. trade framework.
Ah, so that's the catalyst.
It is. That deal provides a long-term roadmap, and capital is flowing in to front-run that growth. It's the China plus one strategy finally, showing up on the balance sheets.
We are definitely going to deep dive into that trade deal in a moment because the fine print is fascinating. But first, we have to talk about the carnage in the commodities market.
Right.
You mentioned the safety nets are being cut. What is going on with bullion?
Carnage is the right word. We are looking at a massive correction. Silver ETFs have crashed by 15%.
Hold on, let me repeat that. 15% in a single session.
15% down. Gold ETFs have also slid by about 5%. To put that in perspective, this is the biggest single-day fall since the calendar year began.
That is violent. Usually a 1 or 2% move in gold is a headline. A 15% drop in silver is, well, it's a crash. Why is silver getting hit so much harder than gold here?
Well, silver is often called gold on steroids by traders because of its high volatility. It has a dual role. It's a precious metal, yes, but it's also an industrial metal.
For electronics and solar panels.
Exactly. So when traders panic sell or book profits to move money into stocks, they liquidate the most volatile assets first.
So the logic is, I made money on gold and silver while the market was scary. Now the market looks safe, so I'm selling my gold to buy some blue chip stocks.
Precisely. It's a massive rotation. Money is moving from the bunker to the casino. The question for you as an investor is this a falling knife?
Meaning if you try to catch it, you get cut.
Right. Or is it the buying opportunity of the decade? Analysts are split, but the consensus is predicting a very, very choppy ride.
So wait for the dust to settle.
Maybe. If you're risk-averse, you might want to. Meanwhile, the other major commodity, crude oil, is also taking a hit. Prices have slipped by more than 3%.
And what's the story there?
That's the geopolitical risk premium just evaporating. For the last few weeks, oil prices had a few extra dollars built in just because traders were terrified of a supply disruption.
Right, the Middle East tensions. And now?
Now we have news that the U.S. and Iran have agreed to hold talks in Oman.
Talks are boring, and markets love boring when it comes to war risk.
Exactly. It doesn't mean peace is breaking out, but it eases the immediate fear. When the fear factor drops, the price drops.
Okay, so to wrap up the market pulse, equities are up on trade deal optimism. Gold, silver, and oil are down because the world feels a little safer today.
That's the perfect summary.
Okay, let's double-click on that catalyst. The India-U.S. trade framework. This isn't just a handshake photo op, is it?
No, this is substantial. New Delhi and Washington have finalized an interim deal that's being viewed as a massive catalyst for exports and investment.
Let's break down the scorecard. What does India actually get?
The headline victory for India is market access. We've secured a zero-duty window for exports worth billions.
Zero duty is the magic phrase. That means Indian goods land in U.S. ports cheaper than competitors.
Precisely. And you need to look at specific sectors to see who wins. If you're holding stocks in textiles, apparel, or footwear, you are smiling today. This is being called the 18% tariff pivot.
Unpack that number for me. 18%.
So previously, Indian textiles faced tariffs up to 18% to enter the U.S. Those are dropping to zero or near zero. Overnight, Indian shirts and shoes just became 18% cheaper, or the Indian companies just pocketed that margin.
That's a game changer. It puts India back in the ring against Vietnam and Bangladesh, who've been, frankly, eating our lunch in that sector.
It does. And on top of that, there's the investment angle, a non-binding intent for massive U.S. investment. The target is hovering around $500 billion.
$500 billion. That's infrastructure-level money.
It is. It's a signal that the U.S. is betting long on the Indian growth story.
Okay, but Washington doesn't run a charity. What did India have to give up? I'm guessing U.S. farmers were involved.
Always. The U.S. farm lobby is powerful. India is reducing tariffs on specific U.S. agricultural products. We're talking apples, almonds, walnuts, and lentils.
So cheaper premium snacks for Indian consumers.
Correct. But, and this is crucial, the Indian negotiators drew some very hard red lines. There were no-go zones.
Let me guess. Dairy.
Dairy, poultry, and grains. India explicitly excluded them. Opening up our dairy market to U.S. giants would just decimate local farmers, and that was politically non-negotiable.
Smart. A very calibrated opening. And speaking of diplomacy, there's an energy twist here too, right? With Russian oil?
Not an outright ban, no. But the diversification strategy is clear. New Delhi has stated it is open to importing Venezuelan oil if it's commercially viable.
Venezuelan oil. That's India saying, okay, we won't buy only Russian oil, but we aren't going to just buy expensive American oil either.
Exactly. It's a polite way of saying, we will buy from whoever offers the best price. The Ministry of External Affairs reiterated that energy security is the supreme priority.
Which translates to, our economy needs cheap energy and we will get it from wherever we can. Pragmatism over politics.
It is. Now, moving from macro deals to the corporate scoreboard, it is earnings second.
A rapid-fire round of winners and wounded. Let's start with energy giants.
The star performer here is Indian Oil Corp, IOC. Their net profit didn't just go up, it went stratospheric, a surge of more than fourfold, over 400%.
400% profit growth. How?
It's all about marketing margins. See, they benefited from lower crude input costs, that cheap oil we talked about. But the pump prices for petrol and diesel remained stable.
I see. So the cost of the raw material went down, but the price I pay at the station stayed the same? That difference goes straight to IOC's pocket.
Exactly. But it wasn't a party for everyone in power. Tata Power faced a consolidated loss in one specific segment, the Mundra plant.
The Mundra plant again. It seems to be perpetually in the news.
It does. This time it was an extended shutdown. That hit the bottom line hard. It's a reminder that in power generation, uptime is everything.
But elsewhere in power, renewables are shining. Suzlon Energy.
Seeing green. Net profit rose nearly 15% on the back of record deliveries.
So a mixed bag in energy. What about the Indian consumer? Are we spending?
Oh, we're definitely spending.
Yeah.
Especially on experiences. PVR Inox saw their profit nearly triple up over 160%.
I guess the movie Durandar really pulled the crowds in.
It did. The box office recovery is real. And it's not just movies. Look at Nika.
The beauty giant.
That profit surged dramatically, up roughly 142%. That is a 2.5 times jump.
That's the lipstick effect, isn't it?
It is. Plus a strong festive quarter. And interestingly, Hero MotoCorp posted a 12% profit rise, driven by a better product mix. So across entertainment, beauty, and two-wheelers, the consumer showed up.
However, it wasn't a party for everyone. We had to talk about the wounded. Tata Motors seems to be in a bit of trouble.
Their passenger vehicle unit slipped into a loss. But the story here is straight out of a techno-thriller. It was a cyber attack.
At Jaguar Land Rover, right?
Yes. It just disrupted operations at JLR. And you have to remember, JLR is the cash cow for Tata Motors.
Right. If JLR sneezes, Tata Motors catches a cold.
Exactly. Combine that operational paralysis with a challenging global demand environment, and you get a loss.
And briefly on telecom party Airtel.
Solid, but with an asterisk. Consolidated net profit is up roughly 25% year on year. Great performance, but some sources are flagging higher provisions, which impacted the final number.
Okay, let's zoom out again to the macro and policy watch. All eyes are on the Reserve Bank of India today. The MPC meeting is live. What's the verdict?
The consensus is loud and clear. Pause. Do not expect a rate cut this February.
But why the hesitation? We want cheaper loans.
Because the RBI governor is walking a tightrope. Inflation is ticking up slightly. If they cut rates now, they risk fueling that. But there's another technical reason. The transmission issue.
Explain that one to me.
Okay. Imagine the RBI cuts the official rate, but the bond yields in the market haven't dropped. If market yields stay high, The banks won't actually lower the interest rates for you and me.
So a rate cut right now would be symbolic, but ineffective.
Exactly. It wouldn't really help the borrower. So the RBI is likely to hold steady and wait for more data.
While the RBI holds, the tax man is definitely moving. This new tactic regarding GST sounds like Big Brother is watching.
This is big data in action. The Income Tax Department is now mining GST data to catch evaders.
So they are cross-referencing what you tell the GST Council versus what you tell the Income Tax Department.
Precisely. In the past, you could tell the GST guys, I had a huge turnover, and then tell the income tax guys, oh, I made no profit.
And now the computer says, wait a minute.
Exactly. If your numbers don't match, you're getting a notice. The goal is widening the direct tax base. There's just no place to hide anymore.
It's a tightening of the net. Also, the 16th Finance Commission. Why should the average listener care?
It sounds boring until you realize this determines whether your city gets a new bridge or hospital. It's about how tax revenue is shared between the center and states.
Ah, the classic fight over the pie.
Always. This negotiation determines how much money your state government actually has to spend. So you should definitely watch this space.
Let's look beyond our borders. Global geopolitics. Japan has a new political landscape.
Prime Minister Sanai Takaichi has won a landslide victory in the snap polls.
A landslide usually means stability, which markets like.
Politically, yes, it provides a strong mandate. But markets are wary. Her policies are aggressive. She's a nationalist and a fiscal hawk.
So the fear is she might shake up monetary policy. Japan has had zero or negative interest rates for decades.
And if she changes that, it impacts global liquidity. So stability in government doesn't always equal stability in the markets.
Meanwhile, a surprise thaw between Washington and Moscow.
This is significant. The U.S. and Russia have agreed to restore high-level military-to-military dialogue after a 4-year freeze.
4 years is a long time. Does this mean they're friends again?
Absolutely not. It means they are talking to prevent accidental escalation. In the nuclear age, communication is everything.
It's a safety valve. And that links back to oil, with the U.S.-Iran talks in Oman.
Same theme, reducing the fear factor. Diplomacy is doing the heavy lifting right now.
Before we close, let's talk innovation. Today's story comes from Assam.
This is a fantastic development. We're looking at the world's first AI-based, contactless, remote patient monitoring system.
Contactless, so no wires, no sticky pads on your chest.
None of that. It's installed at the Guwahati Medical College and Hospital by a company called Lordsmark Industries.
How does it work? Is it a camera?
It uses AI and vision technology to monitor vitals, heart rate, respiration without any physical sensors on the body. It reads the micro movements of the body from a distance.
And think about the so what here. In a crowded public hospital, hygiene is a massive challenge.
Exactly. By removing physical contact, you drastically reduce the risk of infection transmission.
Plus efficiency. Nurses don't have to spend time hooking and unhooking machines.
It frees them up to actually care for the patient. It is a massive leap for hygiene and efficiency right here in India, the kind of tech that solves a real human problem.
That is the kind of tech that changes lives at scale. From half-trillion-dollar trade deals to AI saving lives in Guwahati, it's been a packed Monday.
It certainly has. The markets are optimistic, the geopolitical temperature is cooling slightly, but the regulatory eyes are watching closely.
It's a week of opportunity, but also one for caution. Keep an eye on those silver prices.
Indeed.
And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.